So they're going to simply make tremendous profits, but more than that, they're going to really impact on an already weakened society. And the airlines are going to lose more money. They're already slated to lose $9 billion this year. Some of the major airlines are going to either have to be absorbed or go under. And then, of course, we're going to see the expense of shipping massively increase, expense of certainly of food products increase. People don't understand the implications of the massive rise that the price of oil has almost doubled here in the last 6 months, last 3 or 4 months, and basically it's all a byproduct of manipulation on the markets, nothing as it appears to be. Well, our guest this evening, of course, is Bob Chapman from the International Forecaster. And we'll tell you a little later how to get Bob Chapman's International Forecaster, but it is a fascinating read. It will give you tremendous insight into what is really going on in the world today. Not what you're going to read about in the newspaper, because that has nothing to do with reality. The tragedy is there really are forces working behind the scenes that control the commodity market, that control the stock market, that control our reality, because they control the mass media in America. And all we ever see are simply the dancing shadows that they create for us, but the real reality, well, that's only reserved for those who can either see it or listen to Radio Liberty or read Bob Chapman. Well, Bob, you go ahead and pick up the story. What do you think is going to happen as far as the stock market is concerned? Certainly this has all been manipulated up. I think the most significant thing is the price-earnings ratio on the Standard & Poor index is about 120 to 1. Our major corporations aren't making any money.
Well, wait till you see the earnings that are coming out in the third week of July, and they'll stretch into August, and there's going to be some real shocks out there. And I think there's some anticipation in the selling that's going on now. The market got up to 8,800. The rally was very similar to the rally that we had in 1931, which actually was a three-stage rally. But be as it may, the same results, although in those days the market wasn't manipulated. It did what it did. That was a reaction, rally in a bear market, and it is today as well. I mean, the stock market doesn't go from Dow 14,168 down to 6,600. And incidentally, I called the top of the market again. We called it in 2000, and I even put the figure 6,600 in is where you could expect the first helpful stop. And that was if 72.68 was broken, which it was. And it went down and spent a little time there, turned around and went crazy. And I figured it'd go somewhere between 78 and 8,500. And I wasn't quite correct. It went to 88. And if I'm right on this, and the correction has begun, which I think it has, will start to go down, and the market wanted to go down much more than it did today. And tomorrow the market will be down, and the government will be in there trying to hold it up. The government's got their hands full with the 10-year U.S. note as well as the two-year note, two-year bill. So they're trying to keep interest rates down. Interest rates were 4%. The end of last week when they had the auctions. And it's gone from 4.01% to 3.69 2 days later. It's incredible. Markets don't work that way. That is not natural. That is a manipulation of your government in the market. So it's bonds, stocks, commodities, gold, silver, whatever they can rig. But it's not going to be successful. And they know that. And so the market is headed considerably lower.
Well, I think that certainly it's only a matter of time, but what is going to happen, we're just going to have to wait and see. But I think one of the most significant things that's happening is the rising interest rate on bonds, which is carried over from T-bonds over into the bond market. Could you explain to our listeners about the bond market, which is 10 times the size of the stock market and is really the very foundation of our whole so-called capitalist economic system?
Well, when the bonds go down, the yield goes up. And if you own a bond at par, which is $1,000, and
hold that thought for just a moment,
sure.
Bob. We're going to bring all of our stations back on board, and I want them to hear what you have to say. Well, this is Dr. Stan. Our guest is Bob Chapman, the International Forecaster. I was asking Bob about the bond market because I think people really must understand the bond market. The bond market is the very foundation of our so-called economic system, of our so-called capitalist economic system. We hear about the stock market a lot, but there is 10 times as much invested in bonds, which are the foundation of most of our corporation, than there is in the stock market. And of course, what happens is that if the price of the interest of the bonds goes up, well, the value of the bonds go down, and then people want to get out of the bonds because its value is dropping, and the interest rate on bonds is beginning to increase. So, would you explain to our listeners what you were about to say?
Well, the reason that the yields went up in the real market, where people buy and sell things, as opposed to the interest rates which are created by the Federal Reserve, which essentially are zero right now, the same as Japan's been since 1992-93. And they've been really in depression all those years, and they've never come out. And their bond rates are still, the interest set by government for banks is 0.5% of 1%. And that's essentially what we have, and other central banks have been doing the same thing as well. And so the reason that American yields on bonds have gone up so strongly lately is that people who supply a great deal of money to buy treasuries and agencies, which are Fannie Mae and Freddie Mac, or like the Federal Reserve, they're in the market buying collateralized debt obligations with money that doesn't exist. And when you have that happening, it's called monetization. And that means that as soon as the money is created, it goes into the system, and it shows up pretty quickly, usually in 2 or 3 months. And we started this officially in April, and so May, it's getting warmed up for higher rates and higher inflation. And then June, July, and August, the inflation will start rising even more. And toward the end of the year, it'll be pretty strong. And the Fed is going to monetize about $2.2 trillion worth of bonds between this past April and the end of the fiscal year, which is September the 30th. And it might carry over toward the end of the year, but I don't think so. And I think that they will be in the last quarter of the year buying more treasuries from the Treasury, probably another $500 billion. And so you have this tremendous pressure on the bond market because people are saying the dollar is falling because of these promiscuous ways of going about running the economy, like creating money and credit out of thin air. Then on top of it, you have 18% increase in money and credit, which the government won't tell you about.
That is known as the M3, which the government has suppressed going back a couple of years because they don't want the common people to understand that they're in the process of destroying the value of the dollar. Because there's no better way to destroy a nation than to destroy the currency, and they're intentionally doing that. Go right ahead, Bob.
Yeah, there's no end to this, and, there's no way out for them. I mean, the thing is a perfect trap. They're caught and they can't get out. Now, they've been shoveling money into the financial institutions, which they've created in most part out of thin air, and that money is 20 times more than what the banks need, but they have such dreadful holdings on their balance sheets and off balance sheets, money that, deficits that they're hiding, that this money will be needed to offset that, and that's why the banks are lending less, in some instances not lending at all, and being content to make 2 or 3% on their money. And that can't go on forever. And so what's eventually going to happen is that